What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great and enjoying freedom. It's a great day to have a great day. Today I wanted to talk about how just because you can afford something doesn't mean you can afford it. Now that might sound kind of weird. I'm going to break it down and explain it to the best of my ability. Really quick, just in case you're new, make sure to subscribe for new videos all the time. Subscribe to my second channel, which is my backup channel, for even more videos. Get yourself some DYDSS merchandise to help support the channel. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from, sugar-free, low-calorie, packed with a whole bunch of vitamins, a healthier alternative to a lot of the other junk out there. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You can take those free shares, sell them, and use the cash to get something that you'd rather have instead. And every month they have a promo that goes on. I don't know what the June promo is going to be because I'm filming this in May. But every month, if you refer 1 to 3 friends, usually they give you free shares of Apple, which are definitely worth something. You can take them and hold on to them, or you could sell them and once again use the cash to get something you'd rather have instead. Everything will be linked in the description. All right, so today I wanted to talk about how just because you can afford something doesn't mean you can afford something. You might be working with something that's gonna cost you about $500 a month, let's just say. That's the number we're gonna work with for this video. And by the way, this is not really a video to watch. It's more so a video to listen to. If you're in the car, think of it as more of like a podcast style thing, or like you're listening to the radio. I'm not going to be showing very much in this video. It's just a walk and talk type of format. So anyway, let's just say you got a $500 a month payment that you have to make. $500 a month. If you can afford that, it's obviously not the end of the world. If you are unable to afford it, then you might not want to go for that $500 a month payment. But let's just talk about $500 a month, because you want to know what $500 a month is. It's $6,000 a year. $6 grand, $6K, $6,000. That's what $500 a month payments add up to over the course of a year. Again, not the end of the world if you have the currency, but from another angle, what if you did something a little bit different with your $6,000? If you had the option, that is. That same $6,000 invested in a, I don't know, let's just say a broad market index fund like the S&P 500, for example. You put that $6,000 in there today instead of paying $500 a month towards whatever it is that you were planning on financing. That $6,000 invested in the S&P 500 yielding about 1.5% when it comes to the dividend, and also an average annual return of about 8%, typically closer to 10%, but if you factor in the average inflation, which is roughly 2%, we're looking at an 8% return on average, adjusted for inflation. So if you put your $6,000 in there instead, what can you expect? Obviously not guaranteed, but what is a fair assumption to make? What is a fair expectation to have a year from now? It would be worth approximately $6,500, and it would be paying you roughly $90 every year in dividends. $90 in passive income and $500 in on-paper profit. As opposed to negative $500 every single month toward that $500 a month payment. Which, by the way, that $90 cash dividend payment that they give you, it's quarterly, so $90 a year broken up 4 different ways, 20-something dollars, can be reinvested back in. You don't have to take a bunch of money out of pocket. There's people walking over here. Let me skip ahead so I don't accidentally put somebody on camera. I don't even like to put myself on camera. How you doing? It's a better camera than the one I have. It's like a telescope. So anyway, you can continue making contributions on a daily, weekly, monthly, yearly basis if that's what you want to do. You don't have to. It's strongly recommended. But even if you don't, the passive income that your investment pays you every 3 months can be reinvested back in, so that the next payment 3 months later should be even more than it was 3 months ago. Every time you reinvest your dividends, which is passive income, it's not coming out of pocket, it's coming out of profit, can help generate a slightly larger amount of even more passive income next pay period. That's how you need to look at it. And not only that, obviously you can reinvest back in to that same index fund to see even more long-term capital gains and even more passive income. But what you need to remind yourself is it's not just $500 a month that you're paying. Like, if you can afford $500 a month, like I said before, if you can afford it, you can afford it. But can you afford it? Because it's not just $500 a month. That's what we need to remember. It's not just $500 a month. It's also the sacrifice of on paper growing profits and compounding cash payments. That right there is the opportunity cost. That right there is what we need to look at. So I'm going to continue talking about this. I got a bunch of stuff in my hands over here. I'm going to put a couple things down, and I wanted to, while I'm doing this, let me just give everybody one quick friendly reminder while I'm readjusting everything here to like the video, subscribe to my channel, subscribe to my second channel for more videos, get some DYDSS merchandise, try some G Fuel energy formula, and of course make sure to get your up to 12 free fractional shares by downloading Webull and funding your account. Webull is something you can use to do exactly what I'm talking about in this video, to invest. It's currently, and it's been for a couple years now, it's been my favorite stock trading app. I don't trade stocks. All I do is invest. I reinvest dividends, and I continue to contribute every chance I get. That's how I'm building, or one of the ways that I'm building, a passive income dividend growth portfolio. And also my Roth IRA. You can have a Roth IRA on Webull as well. Link in the description. Every month they have a different promo going on. And it's pretty much always, if you refer one friend or sometimes 3 friends, they're going to give you free Apple stock, which you can hold on to, or you can sell and take the cash and put it into a broad market index fund like we're talking about in this video, or you can cash out and take the cash and spend it however you want. Webull link in the description. Don't pass up on an opportunity. All right, anyway, back to what we were talking about. The opportunity cost. That's something that always needs to be factored in. Every single time you're about to move money, you need to ask yourself, and I've been saying this for years, you need to ask yourself, does the value exceed the cost, or does the cost exceed the value? It doesn't matter if you're about to spend your money on something frivolous at the store. It doesn't matter if you're about to convert your currency into an asset of some sort, like, I don't know, maybe a gold coin or something. It doesn't matter if you're about to invest your currency into a broad market index fund or stocks or something else, real estate, whatever, you need to ask yourself the question every single time you're about to part ways with dollar bills. Ask yourself, does the value exceed the cost? Is what I'm about to get more special? Provide me with more than if I were to just hold on to this currency right here? That's what you need to ask yourself. Does the value exceed the cost? Is it going to give me something that's worth more valuable than the current price? This is something that I asked myself when I bought a water purification unit, which I know might sound pretty weird to a lot of you watching. You're like, wow, that came out of left field. We're talking about, money and investing here, and now you're talking about your water purification unit. What are you talking about? Let me explain. In 2019, I purchased myself I believe it was a $250 water purification unit. That was 2019. The rest of that year went by, 2020 went by, 2021, 22, and half of 2023 so far, I have not purchased a single bottle of water. So did the value exceed the cost? I would say yes, it absolutely did. You want to know why? Because I used to spend about $1 a day on water. I used to buy the gallon water jugs. I try to drink about a gallon a day, sometimes half a gallon a day, depending on what time of the year it is. And it would cost me on average, $1 a day, aka $365 a year. Maybe a little bit less if I'm drinking less water in the wintertime, but about $350 a year. Anywhere between $365 a year. But I bought a $250 water purification unit, started purifying my own water. I just fill it up at night, I go to sleep, I wake up the next morning, and I have 2.25 gallons sitting there waiting for me. All it took was 250 days to go by for me to break even. And from that point moving forward, a penny saved is a penny earned. So, I've been saving all that money that I used to be spending on water. My water is now free because I spent the $250 one time on a purification unit. I asked myself, does the value exceed the cost? And yes, it absolutely did. I'm no longer spending approximately $365 on water anymore. I'm spending $0 on water now. So did the value exceed the cost? Yes, it absolutely did. Not only does it save me money, but it offers me healthier water, cleaner, more filtered, more purified water. And I'm not exactly one of those go green, save the earth type of people, but if I have the opportunity to be environmentally friendly while doing what I'm already doing anyway, you better believe I'm going to take it. I'm going to do it. I'm a fan of the earth. It's part of why I'm out here. You think I want to come out here to this hiking trail and see garbage all over the place? No. I do, sometimes. But no, I'm a big fan of the earth. I'm just not one of those annoying people that like to tell you about it nonstop and force you to be like me. So anyway, the value exceeded the cost there, and that was a purchase. Does the value exceed the cost when it comes to a conversion of currency to, let's just say, a gold coin? I don't even know what the spot price is off the top of my head, but let's just say with the premium included, it's about $1,900, or let's say $2,000, just to keep it at a nice round number. $2,000. Got to ask yourself, does the value exceed the cost? Is it a good idea to take 2,000 of your dollars and park it in a little 1 troy ounce gold coin? The answer might be yes, the answer might be no. If the answer is yes, then it might be a good idea. It might be better. Your $2,000 might be better or safer, more secure, parked in that little 1 ounce gold coin. If the answer is no, maybe now's not the time to be buying gold. If the answer is no, maybe your cash, your currency, would be better off somewhere else. So does the value exceed the cost when it comes to a purchase that you're making? Does the value exceed the cost when it comes to converting your dollars into a gold coin? Does the value exceed the cost when it comes to investing? Let's talk about investing now. $1,000, $100, $15, whatever it is that you have to work with. Does the value exceed the cost? Really depends on what you're investing in. If it's an overvalued stock, obviously the answer is no, and you have to familiarize yourself on how to do some fundamental and technical analysis. But I like to avoid all of that. I like to be as hands-off. I like to be as passive when it comes to my investing as possible, because one of the reasons I'm investing in the first place is so that I can generate passive income, residual income, and little by little, inch by inch, step by step, brick by brick, build myself up something that will create financial freedom. Now, as I always say, financial freedom doesn't insinuate that you need to be a multi-millionaire, rich, driving Lamborghinis, living in a mansion. No. You could be financially free on like $20,000, $30,000, $40,000 a year, depending on how much of a minimalist you are. But anyway, I'm investing for financial freedom. And not only financial freedom, but equally as importantly, time freedom. I want to free up more of my time. I want to be able to spend more time doing things that I enjoy. I want to be able to go for a walk in the woods more frequently than just on my day off like today. I work 6 days a week, and I would eventually like to be able to get myself to the point where I can afford to work 5 days a week. And from there, keep building something up, and maybe, just maybe, be able to make the decision to go from full-time to part-time if that's what I chose to do. That's what's important to me. Time freedom. Arguably more important than financial freedom. And like I said before, you can get this whole thing started on any stock trading app, generating passive income little by little, inch by inch, step by step, brick by brick. I use Webull. Download the app and fund your account for up to 12 free fractional shares, and every month they have a promo. They're going to give you even more free stocks, usually Apple, which you can hold on to or sell and use the cash to do whatever you want. Webull link in the description, just a friendly reminder. But that's what I'm focused on. Not just financial freedom, but time freedom. Time is the most important thing to me, because it's the one thing in life you can't get back. I can lose all my money today. I can lose all of my assets today. My entire stock portfolio can go to zero. All of my silver and gold can get stolen. Everything can be taken from me. And guess what? I'll still go back to work tomorrow and work on a paycheck. So little by little, I can buy all of those things back. But guess what? You can't buy back your time. It's the one thing in life you can't replace. It's a fleeting asset. It's the most important asset. It's the most valuable thing on the planet, your time. It's the one thing in the world you cannot get back. No matter how hard you try. You can buy a watch, can't buy time. You can find $5 on the ground, but you can't find 5 minutes. That's just the way it works. Time freedom is the most important thing to me. So the reason I'm talking about time freedom right now is because I don't want to invest so much of my time analyzing stocks and reading through all these earnings reports and comparing and contrasting what's the best pick. Oh, did I make the right decision? Oh man, I went with the second best option. That one's outperforming me. Oh, I could be beating the market by this much versus that much. No. Rather than doing all that, worrying so much, thinking so much, reading so much, analyzing so much, rather than trying to beat the market, I just invest in the market. And when I say that, I'm talking about the S&P 500. I want the S&P 500 to eventually make up 40% of my entire portfolio, my entire everything. Stock market related, I want the S&P 500 to be the backbone, to be the foundation of my entire portfolio. And it's currently 40% of my Roth IRA, but my Roth IRA is very small compared to my regular investment portfolio, my dividend growth portfolio. I'm not talking about my retirement account here. I did choose for the S&P 500 to make up 40% of my retirement account. My retirement account is made up of a 40-40-10-10 split. And if you are in my VIP club, which is my Patreon page, I'll leave the link in the description. You get early access to every single video. You'll be able to watch, I believe, over 1,000 videos that I've made over the years. 0 YouTube ads, no commercials that pop up or anything like that. And I post them every single day, or every single time that I have a video. I post it at 4 o'clock in the morning every single time. So if you're interested in watching any of my videos early and commercial free, the VIP link will be in the description. But if you're a VIP club member, you may or may not remember during my older live streams that I would do regularly, I've explained what the 40-40-10-10 split is within my Roth IRA. I'm going to keep that as a VIP exclusive, but that's what my Roth IRA looks like. It's a 40% S&P, 40% something else, 10% something else, and 10% something else. That's just how I structured it. That's what I chose to go with. But the S&P 500 in my regular investment portfolio is currently, I think, only maybe like, I remember when it was 4%. I'll check right now. I remember it was 4%. I believe it's 5 point something percent at this time. And regardless of what it is, my goal is for it to be close to 40% later on down the road. All right, here it is. 5.64%. That's how much the S&P 500 makes up of my regular investment portfolio. 5.64%. I got a long ways to go, but right now, that's the primary way that I'm investing. That's what I do primarily. Right now, I'm not really dumping a whole bunch of cash into individual stocks. For the last 2 years, I've been far more focused on 2 index funds. I contribute to them every single day, Monday through Friday, as long as the market's open. I do an equal amount into the S&P 500, or I do a certain amount into the S&P 500 and an equal amount into a different index fund every single day. 2 index funds I buy into. I will buy the dip on an individual stock that I believe in if I see an opportunity to do so, and every single time I get a dividend payment, I will reinvest it back into whatever it is that just paid me, to keep that snowball rolling, to keep it growing, to keep it moving, to sustain that momentum, and also buy the dip whenever possible. But my primary focus is on index funds at this time. So does the value exceed the cost on these index funds? For me, the answer is yes. Yes, it does. With an average annual rate of return of about 8% adjusted for inflation, with dividends reinvested, compounded over time. I always say, you're going to have some good years, you're going to have some bad years, you're going to have some unbelievably euphoric years, you're going to have some disastrous years. If you add everything together, on average, it evens out to be about 8% a year, every year adjusted for inflation. No one has invested in the market regularly and consistently over a 20-year period and lost money. Every single person has come out ahead. Every single person has come out on top in a 20-year investing span. People have lost money over the course of 5 years, 10 years, sure. But nobody that has invested for a 20-year period has lost money. If they were investing in broad market index funds and investing in the market, not just a particular stock, that could die out in 20 years. The S&P 500, for example, is 500 stocks. 500 of the biggest, baddest publicly traded U.S. companies all in one basket. 500. You can go for a total U.S. market index, which, to my understanding, I believe it's a couple thousand stocks all in one. I want to say it's like 2,000 or 3,000. I don't remember off the top of my head. But there's a total U.S. market index. If you want the small caps, the smaller ones, you can go for an international market index if you want to invest in something that is pretty much everything in the world except for U.S. companies to get some exposure to emerging markets and whatnot, diversification. You can invest in a bond market index, which is a collection of a variety of different types of bonds all in one. You can go for a total world index, which is every single publicly traded stock on the planet. Scary to think about. Everything. Total World Index. You can go for a tech-focused index, something that's much more growth-oriented, usually not much of a dividend payer. You can go for a high dividend yield index, which has, let's just say, 50 or 100 or 200 or however many higher dividend yielding stocks all blended together, some of which are designed to be high dividend, low volatility indexes. There are so many different ways you can go. Whatever you're looking for, you can find an index fund for it. And if you want everything all in one without even thinking about it, there's the Total World Index for you. It can all be found on Webull. Download the app and fund your account. Up to 12 free fractional shares just for doing so. And every month there's a promo where you can get even more free stocks, usually Apple stock, which you can sell or keep. Do whatever you want with. Webull link in the description. But that's the power of the index fund. And I personally believe that the value exceeds the cost. And the cool thing about doing things the way that I do, which I don't recommend because it is kind of hands-on. Well, not really, because you can automate it and set it up as recurring investments. It'll just, take the money out of your checking account, send it over to your brokerage app, and then reinvest it in the stock or index fund of your choice for you. And you can just, turn your phone or computer off for 6 months, and it would do it however you set it up to do it. You can have it set up to be automated. I like to do it because I think it's fun. Investing is like a hobby to me at this point. I really enjoy it. So I do it manually. I do it the hands-on way just because I like it. But what I don't necessarily recommend is doing it every single day, just because it's a little bit excessive. Every week is good. You can do it every day. It doesn't really matter. At the end of the day, it's just a lot. Are you prepared to do something every single day, like 5 days a week? Probably not. You already do that at work. But the way that I do it, and by the way, when I say I don't recommend it, I don't not recommend it either. You could do it every day if you want. You could do it every week, every month, every year. Whatever works for you is the best way to go. But I do it every single day, and by doing so, I'm dollar cost averaging on a daily basis while the market moves in its up and down, up and down, up and down, up and down direction. So sometimes I'm buying when the market's up, sometimes I'm buying when the market's down, sometimes I'm buying when the market is moving sideways. Every single day I buy a little piece of however the market is performing that day. So I'm pretty much always in line with what the market is doing in terms of my S&P 500 investment, since I make it every single day. It's kind of hard to be too far off. My average cost is pretty much what the price is all the time, because I'm dollar cost averaging every single day. The market dollar cost averages itself every single day, and every single day I'm aligned right there with it. So that's just, again, I don't recommend it. I don't not recommend it. That's just what I like to do. That's just what I decided to do. So anyway, does the value exceed the cost? I would say yes, absolutely. Because I'm dollar cost averaging on a daily basis. Every single day, I'm buying a little bit more. Every 3 months, I reinvest the dividends right back in. If the market is heavily down, I will buy the dip. I will buy even more than what my daily contribution would ordinarily be. And on top of that, an average annual rate of return of 8% adjusted for inflation. Closer to 10% if you don't factor in inflation. But last year, I think we returned like negative 16%. Not too great. The year before, we returned, I believe, we were up 25-ish%. So this is what I'm talking about when I say you're going to have some good years, some bad years, your unbelievably good years, and your unbelievably bad years. It all averages out, moving in an upward direction. It averages out to about 8% a year, adjusted for inflation, which means you're still moving in an upward direction. 8% a year on average. Pretty good. Pretty rock solid. Very, very, very good, in my opinion. So yes, when it comes to the way that I invest, I absolutely believe that the value exceeds the cost because of what it will provide to me later on down the road. Imagine an average annual rate of return of 8% every year, increasing in value on paper profits, paying me more and more and more in dividends every 3 months. Every 3 months, I make a little bit more than I made the previous 3 months. Every pay period, 4 times a year, every 3 months, I make a little bit more than what I made 3 months ago. So all of these contributions, whether you invest daily, weekly, monthly, or yearly, you're giving yourself a pay raise every year. You're beefing up your net worth, most importantly, but you're also creating more and more cash flow. You're giving yourself a pay raise. You're giving yourself a net worth boost. And if you do this regularly and consistently, small steps in the right direction will eventually take you to where you want to go. The compound effect starts to kick in. The snowball effect starts to kick in. And as you're reinvesting dividends and continuing to make contributions, daily, weekly, monthly, yearly, whatever, you're making the snowball bigger. And the bigger the snowball gets, the faster it rolls. And the faster it rolls, the faster it collects even more snow. And as it collects more snow, the bigger it gets. And the bigger it gets, like I just said, the faster it rolls. And the faster it rolls, like I just said, the more snow it collects. And the more snow it collects, like I just said, the bigger it gets. That's the compound effect. That's the snowball effect. And that's what happens when it comes to investing. You can expect an average annual rate of return. If you add up all the years and divide it by however many years you've been investing for, you can expect an average annual rate of return of about 8% adjusted for inflation. So it's continuing to grow in value, even though there will be market fluctuations up and down, up and down, up and down, moving in an upward direction, 5 steps up, 3 steps down, 6 steps up, 2 steps down, 4 steps up, 3 steps down, 10 steps up, 6 steps down. You're moving in an upward direction. There's that upward trajectory, while continuing to add fuel to the fire by making contributions and reinvesting all the dividends that it pays you right back in to expedite the process. So does the value exceed the cost? To me, oh my God, yes it does. Good Lord, yes it does. 1,000,000,000,000% it does. It's been going so well. I understand now why this isn't taught in schools. I understand now why money and personal finance has always been such a taboo thing. It's always been such a thing. I don't want to talk about your money. I understand to a certain extent. You shouldn't be sharing how much money you make. You shouldn't be sharing how much money you spend or invest, or how much money you made or how much money you lost. You shouldn't be talking about very specific, dollar amounts. You can talk about percentages. My entire portfolio overall, who knows? Maybe my entire portfolio is $100. Maybe it's $1,000,000. It doesn't matter, because that's not something that I would share on the internet. But the portfolio is up about 24% overall. From day one to today, my entire portfolio, all of my investments that I made out of pocket, all of the dividends reinvested out of profit, put right back in, consistently and regularly making contributions, sometimes daily, sometimes quarterly, whatever. From day one to today, my entire portfolio is up 24%. And that includes buying when the market completely crashed, buying when the market was back up, buying during, 2021, when the market was like crazy euphoric, crazy high. We were it was almost impossible to lose money that year. Like everything was moving in an upward direction. I was buying at the very top. I was buying at the very bottom. I've been buying on the way up, on the way down. I've been buying the whole time. Overall, I'm up 24% or 23, 24, something like that. 20-something percent. With a very diverse portfolio. because I spent my first 2-ish years investing into pretty much only individual stocks, and I've been spending the last 2 years investing almost exclusively in index funds. So I have a nice mix of both, and I get a cash dividend payment almost every week from a variety of different sources. Some weeks will be good and I'll get like 3 cash payments. Sometimes I won't get a cash payment for 2 weeks. It just all depends on the dividend payout structure. Doesn't matter. Doesn't matter exactly when it comes through, as long as it comes through, and so far every single last one of them have been coming through and growing. Because if it pays me $1, or if it pays me $50, whatever it pays me, I invest it right back in, and oftentimes I'll add a little bit more to it. If the dividend isn't enough to buy me an entire share, sometimes I'll throw in a couple of my own dollars just so I can buy an entire share. Or if it's something that's like a $200 or $300 stock, I'll add a little bit of my own currency out of pocket to buy a quarter or a half of a share if that's all that I can afford at the time. Because I know I'm expediting the process. So does the value exceed the cost? Yes, it absolutely does. I almost lost track of how I started this video in the first place. This video was talking about just because you can afford it doesn't mean you can afford it. But coming around full circle, that's why. Going and buying a really expensive car and dealing with, a $500 a month car payment when you don't necessarily need to, maybe you do have $500 every single month and it wouldn't really hurt you to do. Yeah, what's $500? What do I care? $500, who cares? Yeah, that's nothing, chump change. Sure, maybe. If you're blessed enough to be able to just, throw $500 towards that, if that's something that you really want to do, sure, okay, absolutely, go for it. You're not taking $500 out of my pocket. I don't care what you spend your money on. All I'm saying is just because you can afford it, maybe you very well can afford it. But can you afford it? Can you afford all of the money that you're leaving on the table? Yeah, maybe you're driving a brand new, nice, shiny, beautiful, gorgeous car, and you're paying $500 a month as you're financing it, sure. And maybe it's not hurting you, but is it not hurting you to leave all that money on the table? 8% average annual rate of return plus dividends, which you can reinvest and continue to contribute to create even more capital gains and even more passive income. Can you afford to sacrifice that? I can't do it. I wouldn't be able to. I can't afford that. I can't afford to leave that on the table because of what I know that it will provide me with later on down the road. And I'm just scratching the surface here, and I'm already seeing what everybody talks about. I'm already seeing. I'm getting a little bit of a taste. And I made a video recently where I talked about what financial freedom means to me. If you haven't seen it yet, just go onto my channel, scroll down. I posted it a couple weeks ago. It's titled, What is Financial Freedom? It was like an hour-long video where I talked about my own personal definition of financial freedom, like how I would define it. I talked about what financial freedom is not. I talked about what financial freedom is, and I talked about how to work your way toward financial freedom, which I touched on a little bit here. And as I said before, one of the ways you can go about doing so is by investing. Whether you want to go with stocks or whether you want to go with index funds, you can get set up right there on Webull, up to 12 free fractional shares just for creating an account and funding it. Even as little as a penny, still works, still counts. You still get your up to 12 free fractional shares. Link in the description. They have a new promo going on every month. You can get free shares of usually Apple, sometimes Google, sometimes something else, which you can hang on to, or you can sell and use the cash to do whatever you want. Link in the description. So that's what that video was about. I deeply went into detail about how to begin the process of generating passive income and working your way toward financial freedom, which, by the way, as I always say, this is not coming from the perspective of somebody that has achieved financial freedom. I'm not there just yet. I'm nowhere close. But in that video, I talked about that's kind of how I see my day off. I work 6 days a week and I'm off 1 day a week. And on my off day, it's almost like a free sample of what financial freedom and time freedom would look like. Because on your day off, you do whatever you want. Do whatever you want on your day off. You can sleep in if that's what you want. If it's a true day off I'm talking about. I'm not talking about a day off where you have a bunch of other tasks you got to worry about. No, a true day off where you wake up whenever you want to wake up, whether it's 4 in the morning, whether it's 12 p.m. You wake up when you want to wake up. You get out of bed when you feel like getting out of bed. You don't have an alarm clock blaring in your ear. You're done sleeping when your body says you're done sleeping. That's what I'm talking about. And doing with your day, what you choose to do. A walk in the woods. Go camping. Go to the movies. Stay home. Take your wife out. Take your kids out. Do something with your friends. Go fishing. Go and get a canvas and paint a picture. Do whatever you want. A true day off is a free sample of what financial freedom and time freedom look like. Now imagine being able to do that a little bit more often. Imagine not having to break your back for 6 days just to get that little free sample, little reminder of what it's like to have freedom. Imagine having that a couple days a week. Imagine having enough passive income rolling in so that you can afford to take your part-time job and step down to just being to a part-time position, or quitting altogether if that's what you want. That's not what I would want. I get a sense of purpose. I get a lot of satisfaction from my job. I get a lot out of my job. I love my job. It's a big part of who I am. And if you're watching this video, if you're a guy, that probably resonates with you. That's the masculine purpose. It's your job. The feminine purpose is the family. Now, every male has his masculine purpose and a little bit of their feminine purpose as well. And every female has their feminine purpose with a little bit of their masculine purpose. That's just the way it is. It's like 90%, 10%. And when the roles are reversed, it's the other 90% instead of 10%, and it's the other 10% instead of 90%. That's just how it is. Anyway, point being is I'm a guy. I get a lot of satisfaction. I get a sense of purpose from my job. It's really important to me. So I have no desire to quit my job. I don't think I'll ever even retire, to be honest with you, but I want the ability to. I want to go to work by choice, not by force. I want to go to work because I like my job, which I do, but I don't have the option to quit because I wouldn't be able to keep a roof over my head. I wouldn't be able to keep food in the fridge. I wouldn't be able to survive without money coming in. You can probably relate. You need a paycheck. Can't buy food without money. But imagine you're making enough passive income to supplement your active income, and you get to the point where you're making enough passive income to step down to being a part-timer, and you no longer have to break your back 5-6 days a week. Now you go to work 3 or 4 days a week. Imagine having a 3-day weekend every single week. Every week, forever. You're off Saturday and Sunday and Monday. Imagine that. Or imagine working only 3 days a week. You're off 4 days. Or you quit your job altogether. You retire early. Or you retire late. Retiring is retiring. Imagine being able to retire because you have enough passive income coming through and you're able to afford it. Just imagine that. You don't have to retire. You don't have to quit your job. You don't have to step down to part-time. But imagine having that in your back pocket, where you know that you could if you wanted to. You're here because you want to be here, not because you have to be here at work. Just imagine that. That's got to be an incredible feeling. And I want to be able to experience that, which is why I do what I do. So yes, to answer the question, the value absolutely exceeds the cost. Because I know what it will provide me with later on down the road. It's only been about 4 years for me, 3.5, 4 years, however long it's been. It's only been 3.5 or 4 years. God, imagine when I hit a decade. Imagine when I've been doing this consistently and regularly, continuing to build, investing money out of pocket, reinvesting dividends out of profit, while I see an average annual rate of return of 8% adjusted for inflation. My net worth, I continue to beef it up. My passive income, I continue to build it. It compounds over time, it snowballs over time, and the momentum just keeps going and going and going and going. With a well-diversified portfolio made up of primarily index funds and a couple powerhouse individual stocks, fast forward another 6 years from today, imagine where I'll be. Imagine where you'll be. And I always say, the best way to get started is not only Webull, link in the description, but the best thing to focus on when you get started is by asking yourself, what is my smallest bill? What is the smallest thing that I have to pay for every month? It's probably your phone. $25, $30, $50, whatever it is, whatever your phone bill is every single month, it's usually the smallest expense. Maybe it's a $10 or $20 gym membership or whatever it is. It doesn't matter what it is. What is your smallest expense? What is your smallest monthly bill? How can you generate enough passive income? What do you need to do? How much do you need to invest? Let's just say it's $10 a month. What do you need to invest to generate $120 a year in passive income? Spoiler alert, it doesn't take very much. A lot less than you probably think. What's it going to take? What do you need to do to generate $120 a year in passive income? So divide that by 12. Your smallest bill of $10 a month is completely taken care of. And once you do that, move on to the next. How can I get my second smallest expense covered? How much more do I need to invest? Now, all of a sudden, you're beginning little by little, slowly but surely, step by step, inch by inch, brick by brick, eliminating your expenses with passive income. It's not about being a multimillionaire. It's not about buying a whole bunch of stuff. It's about using passive income to eliminate your expenses and free up more of your time. That's what it's about. Does the value exceed the cost there? I would say yes, absolutely. Can you afford to leave that on the table? Maybe you can. I can't. You can afford it, but can you afford it? Sure, you can afford your $500 a month, car payment or whatever payment it is, but can you afford what that $500 a month or $6,000 a year invested would provide you with? I can't afford to leave that on the table. Can't afford it one bit. Scares me out of my mind even thinking about, oh my God, imagine leaving that on the table. How much it can expedite the process. But that's what it's about. That's passive income. That's financial freedom. Or at the very least, that's the beginning stages of passive income. That's the beginning stages of financial freedom. That's what I've been working on over the last couple of years. How can I get rid of this expense? How can I get rid of that expense? Or how can I get this expense covered for me passively? A $10 a month membership doesn't really sound like very much, but imagine that $10 a month membership was free and you still got the service. Imagine your passive income was taking care of that $10, and now you no longer have to pay $10 out of pocket, and you could use that $10 to further invest. It's not going to generate you very much, $10 extra on top of what you're already investing, but it fuels the fire. It expedites the process by a little bit. $10 can go a long way. That's the power of compound interest. That's the power of financial freedom. And that's how you can get started. That's how I've been doing it for the last couple of years. It's very important to me. And I know that it can help a lot of people out. Like I said, it's not about being a multimillionaire. It's not about being, rich and super successful. It's not about driving the Lamborghinis and living in a mansion and taking a private jet to a different vacation twice a week. That's not what it's about. That's not what it has to be. It's about how can you generate an extra $100 a month or $100 a week even That would be helpful. That would help most people. And it doesn't have to be an extra $100 a month or $100 a week to further invest. It's an extra $100 a month or $100 a week to spend on things that you need to spend it on. Imagine just building yourself up a portfolio that pays you $100 a month so that you can use the $100 because you're $100 short, or roughly $100 short on the things that you need to buy. You can use that $100 towards food. You can use that $100 towards rent. You can use that $100 towards fueling up your car. $100 can really help a person out. $100 a month. It might not sound like very much, but it can be really helpful. Even more helpful if it's $100 a week. Just think about it. Imagine 250 passive income dollars every week. That's $1,000 a month coming in passively. How much could that help you? That's a part-time job paycheck right there. $250 a week? That's like having a part-time job without having a part-time job. How much could that help you? An extra $1,000 a month. What could you do with an extra $12,000 a year? It can help out so much. Like I said, it's not about being massively rich and massively wealthy and massively successful. It can help out so much. And I think that's what the goal should be. Start small. Tackle your smallest expense. And once you do so, move on to your next smallest expense. Little by little, eliminate your expenses. Have your passive income cover them for you. Step by step, inch by inch, brick by brick, little by little. Does the value exceed the cost? Ask yourself the question. In my opinion, yes, it absolutely does. Something that you're thinking about financing right now, or something that you've been financing for a little bit of time, I would hope that you wouldn't do it if you couldn't afford it. So sure, you can afford it, but can you really afford it? Can you really afford to leave the money on the table? Can you really afford the opportunity cost? You might be able to afford the cost, but can you afford the opportunity cost? I can't. I absolutely can't. I'm focused on that right now, so later on down the road, I could do things like that if I want to, or I'd have the choice to do things like that if I want to. I remember hearing on a talk show one time, this guy uses all of his active income to buy investments, and he uses his passive income to buy stupid stuff. Now, I don't necessarily recommend that. I don't necessarily agree with that, but I understand what he was trying to say. Don't buy stuff out of pocket. Invest out of pocket. Use the passive income and buy stuff out of profit. That's the best way to go, at least in my opinion. I'm not a financial advisor, so what do I know? All I'm doing is my job, teaching people about personal finance, teaching people about money, how to be smarter when it comes to budgeting, when it comes to building credit, when it comes to investing in stocks or index funds, or converting your dollars into silver and gold if that's something that you're interested in, and just all things finance related. The financial news, what's going on in the world of money. Personal finance is really important, and today's day and age, nobody takes it seriously, or well, really ever. Nobody's ever really taken it seriously. Like I said before, I understand now why it's not taught in schools. I understand now why people are so clueless. People are financially illiterate. I understand now why people's financial IQs are, zero. I get it. It's not taught in schools because the teachers don't even know it. A lot of people's parents don't teach their kids about this stuff because the parents don't know it. It's a vicious cycle of cluelessness. But once you get a clue, everything changes. It all starts to make sense. And once you get the ball rolling, oh my God, it'll change your life. And you don't need to be making a crazy amount of money to get started. And once you do get started, your passive income doesn't need to be anything impressive. I always tell people, once you get your first, A lot of people are like, oh, I don't want to invest. I invest this money just to make, just to get a $10 dividend or whatever. I'm like, hey, $10 might not be very impressive, but you want to know what it is? It's a start. It's $10 more than the average person is making passively. So right there, you're already ahead. $10, nothing at all. Can't even buy you a whole pizza. But it's $10 more than the average person's earning passively. Average person has to break their back for 30 minutes to make $10. I think the average person's making what, like probably, I don't know, maybe like $20 an hour or something like that. Gotta work 30 minutes just to make that same $10 when you can make it passively. But imagine making both. Imagine working your full-time job, doing what I do. I make sure to work every single holiday. Get that holiday pay. I've worked every single Sunday for almost a year now to get that Sunday pay. Any chance I have to get some overtime, I take that overtime. I break my back, sometimes almost literally, at work to make as much active income as I can, because the more active income you make, the more active income you have to invest. The more active income you invest, the more passive income you generate. And I do this every week. And I've done this every week for going on a year now with this new job that I have. My old job, it didn't offer me Sunday pay or overtime or holiday pay or anything like that. I switched on over to this new job, and I was working hard before. I was breaking my back before, working for regular pay. Now I'm breaking my back twice as hard for that time and a half and whatnot. Because I know the more passive income you make, the more money you have to save. And the more money you have to save, the more money you have to invest. And the more money you have to invest, the more passive income you can generate. The more on paper capital gains you can see. 8% average rate of return, adjusted for inflation, with growing passive income dividends every 3 months. If you keep making contributions and reinvesting them, it's such a beautiful thing. And like I said before, I'm just scratching the surface. I'm making very, very little passively. But every 3 months, it's a lot more than I was making 3 months ago. I'm just scratching the surface. I'm just starting to get a taste for what this is like. And it's completely bonkers. My only regret is that I didn't start sooner. So anyway, coming around full circle, that's the video. Hope everybody enjoyed it. If you could do me a favor and hit the like button, I would really appreciate that. Subscribe to the channel if you're new around here. I post new videos all the time. Subscribe to my second channel, which is my backup channel for exclusive weekly content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs, and a bunch of different designs, many of which are raising funds and awareness for different charity organizations. I sell everything unbelievably cheap, so I'm earning close to nothing off of it, but it's really important for me to build a brand. So if you can help out and grab a t-shirt, rock it every once in a while, maybe send in a picture wearing it. Your face doesn't have to be included if you want to be anonymous, but I'd really appreciate that. It's always cool to see people rocking the merch. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from. This right here is Twisted Candy. It's absolutely delicious. It's not in my top 3. My top 3 would be Miami Nights, Bahama Mama, and Sonic Peach Rings. All delicious flavors. You got over 50 to choose from. $5 off first order by clicking the link in the description. And last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You could deposit as little as you'd like, even as little as a penny. It still works. It still counts. You still get your up to 12 free fractional shares, which you can take and hold on to, or you can sell them and buy whatever you'd rather have instead. And every single month they have a new promo going on where if you refer a friend or 2 friends or sometimes 3 friends, they're going to give you more free stocks. Typically, they give you free shares of Apple, which you can once again hold on to if that's what you want, or sell and take the cash and do whatever you want with that instead. Don't pass up on an opportunity. Webull, link in the description. You can also set up a Roth IRA on there. It's a tax advantage Roth IRA where you invest dollars that you already paid taxes on from your paycheck, and you can invest them in the Roth IRA, and you can cash out later on when you retire, when you're 59 and a half or older, completely tax-free. All the gains, all the dividends, 100% tax-free. Webull, link in the description. Everything will be linked in the description. And I want you guys to head on down to the comments and let me know one more time. Just because you can afford something, does it really mean you can afford it? Just because you can afford something, maybe you can. But can you afford the opportunity cost? And what are your thoughts on passive income? What are your thoughts on financial freedom? And arguably, more importantly, time freedom? Head on down in the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you next time. Don't you dare stop smiling. Peace.